Alright, folks. I think it would be better to cover this over the call to help you understand the different scenarios we can get in with the FOMC tomorrow, Apple earnings the next day. Um, let's just see where we are. First, from the top to bottom, the retracement that happened was almost about a little over 50%, and the momentum got blocked at the trend line resistance from the top, and this also happened to be an 100% extension for the first leg up. So if I'm just doing this 100% here, then I see that it just marked the top at 5126, right? So given we are looking at different bull and bear cases, I think let's just start one by one. First point is that is this 50% retracement enough, even for a bear case? It probably is. There is no problem with that. And the bear case is that we come a little bit down here, or maybe just this much, and we go back, test the 5075, 5079 range, or maybe a little higher to test this trend line again, and then the sell begins, right? So this has been a bear case, which I documented in the last post as well, right? Now we had another bull case where I said that this would be my one, two, another one, sub two, like sub one and sub two of a three, and then we move up in a third wave, fourth wave, and fifth wave, something like that, right? Let's mark it a different color for now. Let's mark it green. So this was our bull case. So now, when I mentioned that the retracement is a little lower than what I would have liked, for a bull case, an ideal stop at like 5056 or 5040 would have been great, but it's slightly below it, so which is okay. I mean, I'm not gonna be very strict about that and saying okay, this is invalid, because if it starts popping up tomorrow and we cross this trend line, which is above 5100, then we cannot be bearish, right? So this is our bull case still. And if I see this also has held a trend line as well, right? And more often than not, when we have these last minute sales and we close at the bottom, where we have seen in the last 5-6 months or before, is that we get a pop next day, this becomes a bullish engulfing, and we just continue the move up, right? So that can still happen, and I can't say that okay, the bull case is just gone. I started some calls today somewhere around 5056 area, and it's a very small lots right now. Haven't averaged it, wanted to see what happens at the close. It was more bearish than I expected, so I just halted in there and want to see how we open tomorrow, right? Whether that's a good position to hold and average in, or whether to just average and close it here and then create a short position, right? So that's another one. There could be a third case, which is why I recorded this video outside what I had already shared in the previous video and the previous Substack. Is this that what if this turns out to be a double bottom, and like I said, 50% correction may not be enough, and we come here a little bit lower tomorrow, and suppose that we get a big bounce back up, like a flat correction, right? So that would be something which will catch everyone off guard and will trap the bears here, and then throw it back over up again. So now from the count perspective, just see how this differs. Let me how where the difference is. So let me first color this differently as yellow, right? And this is our double bottom scenario, which is coming right from somewhere in this demand zone, right? And it pushes up. So now from the count perspective, if this is a bear move, which is as shown in the white picture here, then we're looking at, this was an A, B, and sorry, where did the A go? This is my A, B and C. Okay. All right. So then we are looking at 1, 2, 3, 4, 5, right? So that's our bearish case. Now in bullish case, like I said, we are looking this as one, two, a sub 1, 2, 3, 4, a 3, 4, and 5. Pretty simple, right? Now the third case that I drew up there was that this whole ABC is just an A leg, and we are coming down in a B leg. Now B can also be like that. You get a small bounce and then you get a sell, and you come to this demand zone, and then we get a C up in a flat, right? Again, it takes us to a higher retracement value, which is above 5144, maybe 5196, 5200. Trap the bears here, and a big rally, right? But again, that may not be the full, again, a bull cycle. That just mean that this particular bearish wave will start from here and then come back here later, right? So very interesting scenarios that can really develop out of the next 2 days. So what I would say is that need to be really careful, when you're shorting with your stop losses, because the bullish cases are like the two bullish cases here. So what I would say is that don't short near to the demand levels. If you're shorting near to this trend line, right? Which is where my previous white top was, that if you get a bounce, you are getting restricted here in the 41, in the 5100 area or 5080 area. This is where you want to short. You don't want to short here, right? And you certainly don't want to short the breakout, right? So this is where the difference will lie in how you understand these patterns, and you want to short the supply zones, not short the demand zones, right? So this is where the supply was created today, and this is where you want to take a short, right? Not here. If you miss it, you miss it. You wait for it. You buy the bottom for the next rally up, and if we rally, you can buy the breakout for here for the rally. If we come here to the demand zone and we look like gonna bottom out here, I would again try to buy the demand rather than trying to short it. So that would be my plan for next 2 days. Keep the size light. Anything can become zero due to all these after hours moves and earnings which are coming for Apple on Thursday, and the NFP on Friday. So quite a big 3 days coming up next. So good luck and trade safe. Thank you. Bye bye.